What's up, everybody? Chuck Fulkerson, TradersArmy.com. Hope you're having a heck of a day. We're going to take a look at our markets today and see what is the blowback, if you will, from the Fed announcement. Where do we see some turning points and reversals in our markets? And is the downtrend over? I don't know. Let's take a look at it because we don't have any definitive signs one way or the other, which is going to make for a little bit tougher sledding. But let's go ahead and dive right in, starting with the S&P. So starting here in the ES, we're up about 16 points this morning. And yesterday's level, we talked about this area here for a potential area of demand on a reversal. We did get a little reversal off of that on a confirmation. If you look at the 15-minute chart, you'll actually see that, it hit that area, gave you an entrance, and moved away for about a 2-to-1. So hopefully some of you that watched the DMC yesterday were able to catch that, make a little bit of cheddar on that move. And so, but that was before the Fed announcement. Fed announcement comes out, and skadoosh, came hammering down with a rally at the end of the day into the early part of the Globex session, and then we sold off most of the evening. Picked up some steam around the London Open, and since the London Open, we've been rallying up a little bit. So, what does that tell me for right now? Well, a couple of things. First of all, here would be my Globex high. And so sometimes you're going to get a breakout trade above the Globex high, but you look for a trap over here to the left, meaning a supply area where we would bounce off of. Don't really have any quality supply here to bounce off of, and so we could theoretically, continue to rally from that level. But I want to go to the 4-hour chart for a moment. And we talked yesterday about the fact that we did have a higher swing low, but we didn't have a higher swing high. Well, we did technically get a higher swing high on our 4-hour chart. But then we got a lower swing low right after the Fed announcement. And so what does that mean? Well, that means that we are now in a sideways trend, right? So a definitive downtrend here. This is now a sideways trend. And sideways trends are much, much harder to trade in. One of the things that I like to do in order to help define trend is I like to use the zigzag indicator set to a 0.5%, because that 0.5% really does a good job on the S&P of showing some of those major turns. And so clearly you can see that we have relatively the same highs and lows. So right from the beginning, understand that you're dealing with a little bit harder trading environment when you've got that kind of a market. So moving this down to, say, the 15-minute chart, you've got a breakout trade that's a potential up here. I don't know that I like the short off of this area of supply, and the reason I don't know that I like that short is for a couple things. Number one, we came close to it and didn't get in. Number two, we're pretty close to with a opposing demand just below there. So I don't like this for a short. That being said, I don't have a great long opportunity either. So I am going to put this area down here, and this was right after the London Open. Where we got the origin of this move up. I'm really thinking about it in the terms of this wick right here. So we had this drop back into here and then a rally higher. So we'll make that our pink line because it's a 15-minute chart. And that's all I would look for today. I'm going to be pretty cautious today. The NASDAQ. So yesterday we looked at this NQ level. On the 15-minute, we came really, really close and did not get in on this NASDAQ trade. So the S&P gave us an entry, the NASDAQ did not. And then when it got to the breakout trade, we didn't get the quality basing, and certainly that was around the news. Now, we did gap down. There was a bit of an intraday gap here in the NASDAQ, which is almost unheard of, that you get these intraday NASDAQ gaps. And we're like we are in the S&P, rallying back up. So theoretically, you could have a breakout above this region here. You could also have a little entrance on a long right in here. So those would be kind of the two long areas that make the most sense. Now, what I didn't do was point out any shorts. And the reason I didn't point any shorts is because I don't really have anything super close to lean on right now from a short perspective. If I look at my supply areas to the left, notice that my suppliers to the left are not great, right? So I'm just going to still be patient and let the market tell me what it's going to give me. But I'm really, there may not be a lot of trades to be taken today. So that's kind of where I would go with that. The Russell We had another gap down situation in the rut. Let me remove some of these lines here. And in the rut, we are up a little bit from yesterday's close, but not much. Coming into the gap fill area here, where we could break through that region, but I don't know that I would take that in the Russell. I will say that we have two clean touches of 1925. This 1925 area, one touch, two touch. That to me is really a strong breakdown candidate if we come back down there and touch that again. Moving over to our energies and metals, as crude oil continues its march a bit higher. We did finally break above that 87. However, we broke above it with no basing, right? We broke above that level with no clear basing. Did create, however, an area where we could see a 15-minute reversal level as we had this rally-based rally, retested that, got a really nice move away. And then if you missed it the first time, you were given it a second time and got a little move away. The third time, we didn't move away as much. So what I'm going to do now is I'm going to continue. I'm going to remove these. I'm going to actually set that up now as a breakdown candidate right here if we come back below there, because that is a nice descending triangle pattern that was touched it a few times. Now, we broke out to the upside on here in our overnight trading. And so looking at where we can go today, I think that, we've talked about the fact that on the weekly chart, we're looking multiple years back at this area here as our potential reversal point. So that would be kind of the where I think prices are most likely heading. And so looking on the long side of crude oil is probably the better way to go. We do have an hourly demand area that was created right in here very recently. So keep that area in mind as well for today. Gold yesterday, gold took it on the proverbial chin, really came hammering down, broke through our confirmation entry, giving us no entry, came to the limit entry, and broke right through there. So when you see demand levels being violated like this, and it just hammered right through those levels, what you would now start to look at and say is, okay, did we change trend direction on the big picture? Well, we've not yet officially put in a lower low, but we are certainly setting up to do so. And so looking higher at potential reversal points as it stands right now, I would just look at this little pivot area right here for a potential short. And if that short's enough to propel us to a new swing low, then you may be able to hold on to this position a bit longer. Looking at our crypto markets, we've been looking at these crypto futures. Here was yesterday's level in Bitcoin. So those of you that were looking at the areas that we identified yesterday in Bitcoin, we talked about this little drop base, very strong drop. Price did rally back into here, and we got a very nice move away. So remember, we're looking for a 2-to-1, and we got more than a 2-to-1. So hopefully some of you are able to catch that trade. And then Ethereum also did the same thing. We had a nice base drop. Price rallied back up into here on Ether, and then we've got a very nice move away from that one. So continuing our overall bearish stance, I think that we're setting up for a breakdown, and I would look at a breakdown below this line here in Ether. And then in Bitcoin, I think you're also looking at maybe a breakdown right below here. If we get basing, remember, we still want to have that quality basing, but I'm looking at this wick over wick area here to the left, and then that we bounced off of it once. We've been looking at the euro each day, so let's take a quick look at the euro. The euro also broke through the opposing demand, but really came to that 15-minute supply area, which was the origin of this move down. We got a really nice touch off of that level, and then free fall. It pulled a Tom Petty and started free falling out of that level. And then this confirmation entry gave us no way to get in because we didn't get a bounce out of it after trading halfway in. So this was a really nice opportunity on a short. I think that it does set up for a reversal trade if we get a rally back up. And so I would look at this area right here as a potential reversal trade going forward. Now, some of our other currencies that we looked at yesterday, the Australian dollar, the New Zealand dollar, looking specifically at the New Zealand dollar, the Kiwi We didn't get a quality basing on here. We did get a little bit of basing afterwards, so you could enter that short on the breakdown trade. Now what I'm going to do is I still like that area, but I like that area now on the reversal back up to it, somewhere right in here. All right. And so those are the levels that I think make the most sense for today. What I'm looking at in my markets, the equities are probably the ones that I'm least likely to find trades in for today. So just keep that in mind. Be aware of that. Don't force trades when you've got a sideways market. Sideways price action gets a lot more difficult, a lot harder to trade. And so, we don't want to go out and just absolutely force things as they show up, through the markets today. So that's I thought I had deleted these levels. Whoops, get rid of these ones here. We traded through those. That's the level that I'm looking at for today. And so if price comes back into here, here's where you would find probably your best opportunity. But if you have any questions, as always, shoot me an email. support@tradersarmy.com. Until tomorrow, everybody, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.